How's it going, everyone? We are coming up on nearly 3 weeks of sideways movement here in the Bitcoin and crypto markets, and it looks like this might be the calm before the storm. So in this video, I want to cover our latest price action, do some technical analysis with regards to cryptocurrencies, look at some charts, patterns, and indicators, and also take a look at some interesting news we have developing in this space. So welcome back to the channel, everyone. Phil here from Money Authority. Be sure to hit that subscribe button for daily videos on crypto, stocks, and more, and also be sure to click that little bell right next to it so you never miss out on the latest news and analysis in the world of crypto, stocks, and finance in general. So let's get right into it. Starting off with our usual crypto market review, you'll notice that we're seeing a fair amount of green today. The trend is overall in the upwards direction. Now, there is a fair amount of red cryptocurrencies here in the top 100 coins, but overall we are looking at a green day here. And I would attribute most of that to the 1.4% gain that Bitcoin has seen in the past 24 hours. As most of you probably know, the altcoins tend to follow Bitcoin, so a good day for Bitcoin tends to lead to a good day for most cryptocurrencies. So Bitcoin up 1.4%, XRP is up ever so slightly, however it's essentially just moving sideways. Ether is up half a percentage point, and again pretty much everything in the top 10 today is in the green. Obviously the only exception here is Tether, and of course that is a stable coin, so it doesn't really count. Jumping over to the Bitcoin charts, there's a few things I want to talk about here. Starting off with our price action, you'll notice that in our most recent candle we did see a decent move up in terms of price action relative to the past couple of weeks at least. We saw the price rise up to 36.50-ish. However, bears were there ready and waiting to kick off some selling, and now the price is hovering closer to $3,600 again. And an interesting thing to note about this current price level where we're holding right now is where we in the past saw a couple of hard bounces down when we tested this level. So let me just hide those Bollinger Bands so you could see this price level a bit easier. Again, bulls appear to be having trouble with this $3,600 level recently within the past 2 to 3 weeks or so. One thing that I want to point out here on the 4-hour charts is that we did see a bullish crossover on the 50-day moving average. So that is this pink line that you see here. Now, this is not the strongest bullish indicator that we're about to see a new extended rally upwards kick off for Bitcoin, but it's certainly not bad news either. It's a good sign for bulls in the short to midterm here. However, again, this is not the strongest bullish indicator that Bitcoin has by a long shot. And really, I'd say until we break out of the current rectangular channel that we're in right now, that we've been in since the 10th of January, any price action we see between 34.50 and 37.50 is essentially just noise. I consider movement between this range to be essentially neutral for the most part. So even though we saw a relatively big price spike within this last candle, because we're still within this rectangular trading range between 34.50 and 37.50, again a channel that we've been in for the past 2 to 3 weeks now, I wouldn't put too much weight on this upwards move here, especially since we've already had some bearish selling action and a bounce down off of 36.50. Zooming out a bit more here on the daily chart, I believe we have a few more confirmations of my bearish leanings here in the short to midterm. You'll notice again we have the 50-day moving average and the 20-day exponential moving average right here. And what do you see here with this latest price move up on this candle? Well, we saw the price rocket up to that 36.50 level, and we essentially saw a perfect bounce down off of this 50-day moving average, and we're now also seeing the price hover below the 20-day exponential moving average. This is something that has happened multiple times within the past 2 to 3 weeks already. You'll notice that last week we had a couple of days where we actually did see a fake out move above both of these moving average lines, but we saw the price get smacked down fairly hard after that. So to me, this indicates that there's quite a bit of selling pressure at this $3,700 level, but on top of that, there's also selling pressure associated with these moving average lines right now. Prior to these couple of candles, we had a few other times where we got fairly close to these moving average lines and also saw another bounce down. So once again, it looks like we have fairly strong convergences of resistance at that 3,700, 3,750 price level. Bulls are really having a tough time with this one in the short to midterm. And guys, I gotta be honest, I do not think that this resistance level right here is the tough one that bulls need to overcome. Again, as I've said in numerous videos recently, I think the strongest resistance level that bulls are gonna have to contend with in the near future is going to be this downward slanted resistance line that kicked off from the tail end of November. Again, this line is significant because Bitcoin's price action has been respecting this trend so far, this trend of lower highs over time. So starting in late November, we've established multiple lower highs. We had our first lower high right around the beginning of December. We had another one at the tail end of December, and most recently we established another lower high around the 10th of January. On top of that, our price action has essentially had 3 near perfect touches with this trend line. And in technical analysis, one of the things that you look to essentially confirm or validate a potential trend line are multiple touches with that trend line. Typically, the bare minimum that you want to look for are 3 touches with the trend line to essentially validate it, which is why I've said in my previous videos, I'm not 100% sure that this bigger descending triangle that you see on your screen in front of you here with this bottom horizontal support line right here is valid yet or is confirmed yet. The reason being is that essentially we've only seen one bounce off of this potential horizontal support level. So this bigger descending triangle is something I'm keeping an eye out for, but in the shorter term, I'm more concerned with this smaller descending triangle that you see right here because we have confirmed this support level around 34.50 several times already. You'll notice that we've had multiple touches with this trend line here, and within the past 2 to 3 weeks or so, we have been moving very, very close to that bottom horizontal support line. So the reason this is concerning for me is because, again, in technical analysis, one of the things that you look out for is price action near a trend line or a support or resistance level. The more time you spend close to a support or resistance level or a trend line, the more likely you are to break that trend line, again, because you just have that many more opportunities to test that support or resistance level over and over again. So we saw another clear rejection off of this $3,700 resistance level, and we've also been trading very close to this 34.50 support line for weeks now, which in my eyes is more of a bearish move. And then on top of that, we have these lower highs that have been getting set since late November with this downward slanted resistance line. So even if we do see a move up here, which again is possible, I'm not saying it won't happen, but even if we do see a move here, again, this downward slanted resistance line right here, this is going to be the tough level for bulls to crack in the near future. I'd love to see it because, again, I would love to invalidate a very bearish pattern that has confirmed for us in the past. Again, I always point out the 2018 mean triangle that we were in throughout the entirety of that year. And again, you all know what happened there. We saw a massive breakdown out of that triangle, a huge confirmation of this bearish pattern. So I do not essentially want to see the same thing happen here in the near future. And again, I think a confirmation of this smaller descending triangle here will eventually lead to further lows here, as well as a potential retest of this $3,100 level, which essentially helps confirm this bigger descending bearish triangle. So I'll be honest, even if I am ready for that possibility for further bearish action in the short to midterm here with new lows in this bear market, I'd much rather see some bullish moves to the upside because, again, I think the crypto markets as a whole are a lot more fun when we have bullish momentum or bullish sentiment going on. So I'm ready and waiting for the possible bullish or bearish scenarios here. Obviously, there are ways to make money here, even if the price goes up or down. But personally, I do like the crypto markets more when we have bullish sentiment going on. I personally think it's a lot more fun when we have kind of hopeful sentiment and enthusiasm going on in this space. So I would love for $3,100 to be our bottom. But again, I have to be honest here. In the short to midterm, the charts are giving me bearish signals right now. And until we invalidate this downward slanted resistance line, until we start setting some higher highs and higher lows, the definition of an uptrend, until we see some honest to God bullish movement here, I remain bearish in the short to midterm. There's a common phrase that I bring up quite often, and that phrase is the trend is your friend. And what has the trend been for all of 2018 and now 2019 so far? Well, it has obviously been a downtrend. So even though there is a chance that $3,100 may have been our bottom for this Bitcoin and cryptocurrency bear market, I just want you to be fully aware that the trend is clearly still downwards here. All right, one last thing I did want to bring up is our Bollinger Bands technical indicator. And this is the reason I think we are in the calm before the storm right now. So one of the ways you can use this technical indicator is to kind of predict when we might see major price volatility. And the way you can kind of identify when that might happen is by looking to see when you see contractions or squeezes on this indicator. So you'll notice that the squeezes on this technical indicator, which by the way is this blue shaded cloud looking thing right here, you'll notice that these squeezes tend to alternate with expansions on these Bollinger Bands, and then it'll squeeze back together, and then it'll expand again, and then it'll squeeze. So essentially, when you see these squeezes happen, that usually is a good indicator that in the very near future, you are due for some big price action and some big volatility. So on some of these longer time frames, like the 12-hour chart, for example, we're seeing these Bollinger Bands starting to squeeze together quite a bit, which leads me to believe we are going to see some big price action very soon. So with a little luck, hopefully that will take us outside of that rectangular trading range that I mentioned earlier, that 34.50 to 37.50 trading range, and we can get a confirmation of whether we're going to be leaning bearish or bullish in the coming days and weeks. But anyways, you will notice that the bands are really squeezed together tight here on the 12-hour charts. Zooming out to the daily chart, you'll notice that although we have seen a little bit of an expansion actually within the past few days, you'll notice that within the past candle or so, we've started to see these bands squeeze together once again. And what's going to happen here is that essentially within a few days, you are going to see a major contraction on these Bollinger Bands, because essentially this big candle right here is no longer going to be relevant on this technical indicator, which takes into account the past 20 candles or so. Zooming out further to the 2-day chart, we're seeing the same exact thing happen here. The bands are getting very squeezed together. You'll notice that they're squeezing together to levels that we essentially haven't seen since that major move down in early November. And the same exact thing here on the 3-day chart, although we're not quite as squeezed together as those levels that we saw towards the beginning of November, because that was truly one of the most boring periods of price action I had ever seen in Bitcoin and crypto's history. But regardless, we're starting to approach those boring levels of volatility once again here. One of my favorite technical indicators, the Bollinger Bands, telling us we are due for some big moves in the not too distant future. That is why I think the past 2 to 3 weeks here are the calm before the storm for cryptocurrencies. But what do you think? Do you think we're going to see some major price action within the coming days? Or do you think we're destined to another really boring period of time similar to what we saw between September and November? Let me know in the comments down below. So that is it for this video, guys. If you enjoyed this one, please consider subscribing. I do crypto videos like this daily, and your support really helps small channels like this one grow. I also highly recommend joining our free Facebook group. It's for crypto enthusiasts just like yourself. Also, if you want to learn the crypto strategy that passively turned $5,000 into $83,000, check out my passive crypto investing case study. It's completely free. You can find the links to both the free group and the free case study in the description down below. Lastly, guys, this goes without saying, but I'm not a financial advisor. This is not professional investment advice telling you to buy or sell anything. This is just me covering some stuff in the financial space that I find interesting. Always do your own research before spending or investing any of your own money. For all that said, thanks for watching, and I'll see you next time.